Global stocks declined to the lowest levels as oil prices hit 13-year lows. Stocks in major European markets and Asia have shed around 3%. Hong Kong stock market's benchmark index posted its single biggest daily fall since early August, while Japan's Nikkei closed down 3.7%. U.S. stock also shed more than 2% in early trade. Oil prices have dipped to the lowest level in 13 years after the World Energy Watchdog warned that the market could drown in oversupply. U.S. crude fell nearly 3% and was traded at $27.63 per barrel, while Brent crude slumped over 2% to stand below $28. The falling oil prices have also dragged the Russian currency to an all-time low against the U.S. dollar. Marco Pietropoli is an economist and he joins us from Bristol. Marco Pietropoli, how does the falling oil prices affect the world economy?
Well, it's a symptom of the situation of oversupply and lack of demand. The implications of low oil prices are quite massive, especially for very leveraged oil companies and gas companies, especially those that have been investing in shale and fracking in recent times, and obviously there's a huge amount of cost to set up these businesses, so they will be struggling, and many may not be able to see it through. Where it affects other parts of the global economy is significantly for governments that actually rely on oil revenue for their finances. That obviously countries in the Middle East, but also Russia. So it has big implications across the board. Yes, but it is a symptom of what's been happening, which is that the global economy has actually been slowing for a few years now.
Do you think that low is going to go lower, and at what price do you think it's going to go down to? I know speculation there, but I got to ask you.
Yes, I'm not clairvoyant, and we don't know where it'll stop. It'll basically low prices are the solutions to low oil prices, because it is now for many below the cost of production, and also companies that produce oil also often produce gas as well, and gas prices are also at very low levels. So the motivation to produce more and invest in further production it won't be there, and in fact production will likely be scaled back. So at some point that will create a floor because the supply will be reduced.
Thank you for that. Marco Pietropoli, economist there from Bristol.